Hey everyone, happy Thursday, February 1st. Welcome to February. It's about 10:50 on the West Coast and time for another market update. Since I last left you guys last Thursday, we basically have had every important piece of news that could come out in my industry come out. We have inflation, we have the Fed meeting, we have home appreciation, we have jobs week, all that kind of stuff. So let's get right to it. First one, the most important one you might have seen yesterday, the Fed concluded their most recent meeting. It's a 2-day meeting. They ended it. Like we talked about, we generally know what they're going to do going in the meeting. The most important part generally afterwards is the statement they release, and then about a half an hour later, Chairman Powell does a press conference. So they did not make any change, no cuts, no raise like we kind of expected. But Chairman Powell did make a comment, and I'll show you that during the press conference. He was asked a question. He said, "I will tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March is the time to do rate cuts." So you could argue with that. There's plenty of reason to think it will be the time to do rate cuts, but that's what they're saying. So that's how the markets are going to react. Stock market did not like this. The bond market, stuff that affects mortgage rates, handled a little bit better. But basically saying, next meeting, which will be in March, they're not going to be ready to do cuts. So we'll see. The markets right now, it's about a 42% chance they think they will do a cut. So not, a little bit less than a coin flip right now. So we'll have to keep a close eye on that. But overall, not too volatile of a meeting. The markets didn't get too crazy. We had a good day yesterday for reasons other than what he had to say. But the next thing we got going back to last Friday was December's PCE inflation number. And keep in mind, this is the Fed's favorite form of inflation. And it basically came in as expected. It was supposed to come in the headline about 0.2% up. It was a little bit lower than that. The core came in at 2.9%, which is really important. So let's take a closer look. Again, month over month, both headline and core up 0.2%. Now the headline's down to 2.6% from its peak of 7.1%. And the core's down to 2.9% from a peak of 5.6%. And then keep in mind, remember, that the Fed's goal is they say they want that core rate to get down to 2%, based on a little comment down there from Chairman Powell. Right now, the 8-month annualized, if we just take the last 8 months of core, that's down to 2.08. So basically right at their goal. So again, going back to what Chairman Powell said, at least inflation looks like it's definitely headed in the right direction. So, that plays in our favor as far as maybe doing rate cuts at that March meeting or a little bit after that in May. Next thing we got, it's jobs week. We get all the jobs reports. This is obviously very important because besides inflation, the main thing the Fed's looking at is jobs. So the first one we got is JOLTS, which is the jobs opening report. That ticked up a little bit higher to 9.026 million. Much down from the 12 million peak I believe last March or so, March 2022. So, job openings ticking a little up, which is interesting given everything we see in the news and everything going on in the economy. But, not too bad. Markets had a little bit of a negative reaction to that, but not too bad. The next thing we got was ADP. ADP actually came in our favor. So this is private payrolls. It came in at 107,000 jobs created, which kind of tracks with the November and October numbers. December right there was an outlier, and that we didn't, that didn't go too well for us. Annual pay increases, those are still nice numbers at 5.2 for stayers and 7.2 for job changers, but those are coming down. It was 8% for job changers last report. So that's, again, anything, the more wage inflation is going on, the worse it is for inflation. The more we're making, the more we spend, basically, the more they'll charge us, and inflation gets a little out of control. So we got to keep, that's why they want to pay attention to what, the pay increases are. And then a little comment from Nell Richardson, the chief economist. Progress in inflation is bright in the economic picture despite a slowdown in hiring and pay. So those, hiring slowing down, but people overall, consumer sentiment is getting better. And a lot of that has to do with, inflation coming down. Then the next one, besides BLS, actually, this one came out today. The Challenger job layoff, basically corporate layoffs came out. And that number came in, I think it's the highest number since 2009. So, again, and then we have these, these different companies that have announced. I think UPS just announced today, 12,000 jobs. Salesforce, did some layoffs. Microsoft, PayPal, all these. Google did some, and they're talking about some in the future. So, that's generally one of the first things that happens. When we see jobs slow down, is going to be, people getting laid off, and then they'll go file for unemployment, stuff like that. And then, like I said, the next thing tomorrow is BLS. I'll get that into here in a little bit, but that's the important one. That's coming up tomorrow. December pending home sales. So December pending home sales came in at plus 8.3% and are now up 1.3% year over year. I wanted to remember last week we talked about existing home sales for December and new home sales for December. And, existing home sales is when the home closes. And so those people would have been shopping in October, November when they went under contract. And so rates were higher then. And so that number was low. That wasn't a good number for existing home sales. But new home sales, when they signed the contract in December, that got a lot better. That number was a big jump, because rates were better. And this one, pending home sales, same thing. These are people signing contracts in the month of December, and it jumped 8.3%. So again, rates matter. Rates definitely had a positive effect on home sales, which is good to know. The better rates get, then hopefully, activity picks up for everybody. The next thing we got is initial job claims came out today. For the second straight week, they beat expectations. So these were really low for a really long time. Now they're starting to tick back up. It was expected to be about 210,000. It came in at 224,000. So, and then continuing claims jumped up to about 1.9 million. So a really high number there. So again, people are holding on to their employees as long as they can, but then when employees are getting laid off, they're having a harder time finding jobs. So they're having a continuing claim. They're staying on unemployment for longer and longer. Miscellaneous stuff. So we got home price appreciation. So back to this graph, we got the Case-Shiller and the FHFA for November came in at 0.2 and 0.3% gains respectively. Now Case-Shiller, which again, Case-Shiller is Case-Shiller counts cash and jumbo loans. That's at about a 5.2% gain year over year. Again, remember, we haven't seen December numbers yet. They're about a month behind, but they're on a 6% pace. And the FHFA came in at 6.6% so far year over year, and a 7% pace. And remember, FHFA does not include jumbo loans and does not include cash buyers. So tend to be lower price loans. So again, all good news so far. What we've seen about 2023 numbers for home price appreciation. Still need to get Black Knight, and then we still need to get December. But like we talked about, we saw that rates came down, so December's numbers might be pretty decent. Next thing, so where does that leave us? The average 30-year conventional actually dropped. Last Thursday it was at 6.9%, all the way down to 6.63%, over a quarter of a point drop, in about a week. That's all great. A lot of positive, economic news. Like we talked about, people seem to be feeling better about things. Inflation's going down. The cost, inflation across the board for businesses, for people, for, employee costs, all those kind of things, all those metrics are showing good things for inflation. So that's all good. Market's reacting good, down to 6.63%. So that's about as low as we got, in the last couple of months. So we're kind of testing those levels again. And like I said, important dates. The big one is tomorrow, is the January BLS jobs report. Last January, this report killed us. It came in at like 500,000 jobs created when it was supposed to be about 150 or something. Right now, they're expecting 180,000. Right now, they're expecting the unemployment to tick up from 3.7 to 3.8. We shall see. It'll be interesting. This January report, they do a lot of population controls, math. They're basically taking jobs that they didn't count throughout the whole year and adding them into this number. Last year, they added 800,000 jobs throughout the year to the January number. So this number will be interesting to see. If this number comes in like they expected, 180, with unemployment ticking up a little bit, that's going to be really good for us. But everybody should be on guard for a crazy BLS job number that will eventually get, revised down and probably isn't a legit number. But, again, they're looking at these numbers. The market's going to react to these numbers, so we got to pay attention to these numbers. So like I said, that was a busy week. I hope you guys stayed tuned through this whole video. I went a little longer than I like to. So if you need anything at all, please don't hesitate to reach out. Otherwise, have a great week, and we'll talk soon. Bye-bye.